Bucking the trend of recent restaurant earnings, Starbucks reported very strong third-quarter results with a 34% rise in profit. That's from an increase in customer traffic. Well, joining me now is Sara Senatore, analyst at Sanford C. Bernstein. Bloomberg has crunched the numbers, and Sara is one of the most accurate analysts on Starbucks. That is why we call you, Sara, a Bloomberg Best.
Thank you.
All right, let's talk about these numbers. Better than even you expected.
Oh, yeah. What we had seen from a lot of the restaurants was that even if trends were holding up, they were maybe a little bit softer than we had expected, not quite the same acceleration that we thought we were looking for. But in this case, Starbucks just kind of blew through the comp number. We had all thought they were increased sales 5%, and it turned out it was 8%.
And why is it? I mean, 8% growth in the U.S., only 5% outside. What's going on here?
Yeah, it's pretty remarkable because obviously the U.S. is their biggest, most mature market, and yet they keep doing things like product introductions like the Frappuccinos that have just been on fire, mobile payments, loyalty programs, all of these
initiatives. How about the Bistro Box? I kind of like the Bistro Box.
Bistro Box is not bad, and actually they said food is actually contributing to their comp even a little bit better than some of their beverages. So you're not the only one who likes the Bistro Box.
And ironic, right? Because the margins on beverages are usually better than on food.
They are, but if you can get somebody who was already going to buy a beverage to also tack on one of those Bistro Boxes or a snack or a muffin or a petite, it's just all added profit.
Now, you talk about additional foot traffic. Okay, so you got more people coming to the restaurants. Are they spending more when they're there?
Yeah, spending a little bit more. It was actually a real nice mix of traffic and tickets. So about 6 points of traffic, couple points of ticket. That's what you're looking for. You want people spending a little bit more, but you don't want companies taking so much price that eventually people come in and they're sticker shock.
All right, back in 2009, the stock was, I think, as low as about $7.50. In fact, everyone was talking about being short this thing. Schultz come out with his book, The Way Forward. How's he doing on his plan? I think
what's been so impressive is how quickly this turnaround happened. People had pretty much left the company for dead, as you say, and, stocks at $7. Nobody thought that this mature restaurant company could really drive comps and growth again, and they just did a great job of executing in their stores, of innovating in their stores with new products, and now launching this massive packaged goods business that I think a lot of us didn't see coming in terms of how big.
And people are actually paying up. The valuation, what, 22, 23 times?
Yeah, that's about right. Which actually, for a company who's growing EPS 15 to 20%, and frankly will probably be ahead of that this year and next year, that doesn't seem unreasonable.
And I got to ask you, I know Dunkin' Donuts, has just priced. You're not yet covering it. Really, no one is. It's too early. That trades about 17 times. You could argue Starbucks more expensive than Dunkin' Donuts.
Well, but I think you would also make the case Starbucks is a proven concept. It's big pretty much everywhere that it wants to be right now. So the brand is really well recognized. It's big in China. And they have, again, this whole package products, bagged coffee, Via coffee, now the K-Cups with Keurig. I mean, those are revenue streams that Dunkin' doesn't yet have.
Okay, only about 15 seconds here. The stock's around 42. How high could it go?
Well, our price target is 48. I think that's a one-year price target. I think that could be conservative.
All right. Well, our thanks to Sara Senatore, analyst at Sanford C. Bernstein.